Hey, what's up guys? John here. Massive changes coming to the housing market. And in this video, I'm going to walk you through exactly what's coming and why I was not a real estate investor over the last 12 months. I was more of a seller than anything. I bought almost nothing over the last 12 months because I really thought that we're just stepping into a huge problem in the housing market. And in fact, I even said that if you presented me a deal 30% below listing price, 30% below listing price 6 months ago or a year ago, I probably still wouldn't have been a buyer based on the cycle in the market which I thought we were in. And now it seems to be very much moving in that direction. I believe what's ultimately going to be happening here is we're going to see the rules being rewritten for landlords across the country in places even such as Texas and California. Many people would already expect big changes in California, but Texas nonetheless. I think we're going to see huge changes. I think we're going to see a lot of landlords leaving the business. And during this period is going to be an incredible opportunity for smart and savvy new investors to hop in and buy real estate at distressed prices. That's in fact what I'm going to be doing. I founded singlefamilyinvestors.com. More information is going to be found January 1. I have some really big changes, huge updates coming for this company. I believe it's going to be a $100 million company in the next 24 months. And I'm really excited about that. I've been talking about this housing market situation, this problem for a long time before all the other, people were talking about housing problems. A lot of people are saying housing, real estate's the best investment, hedge against inflation, yada, yada. Huge changes. Look at what's happening. But first and foremost, this video is sponsored by my company, GreatCreditFast.com. It's an investor-based credit repair system. We are helping investors that want to invest in real estate when the market crashes. They want to expand their business. They want to, make smart investments. They need great credit to do it. My company, GreatCreditFast.com, is the company and the place to help you fix your credit. In fact, just on Friday last week, we removed over 100 items from people's credit reports in a single day. 100 items. One client was 22 items off their entire report in a single day. I mean, we're making huge strides here. So if you're looking for great customer service and great results, it's GreatCreditFast.com. So take a look at this. Judge allows an Oakland eviction moratorium to stand for now, November 23rd, right? So this just came out today. Judge allows Oakland eviction moratorium to stand for now. It's interesting what's happening in California right now, and a lot of people need to pay close attention to it because the same verbiage that's happening in California that we read in these articles, same thing that we're seeing in Austin and Dallas. Some of these markets where people think that would never happen in Texas, it's happening. Right now, LA eviction moratorium, they said was going to be ending. I said about 18, almost 24 months ago. Just in the beginning of all this, I said this isn't going to be gone for years. People thought, oh, it's only going to be for 30 days, 90 days, 120 days. No, this still has a ways to go. Ending LA eviction moratorium may be contingent on further industry regulations. A month after voting to end the eviction moratorium, some members of the LA City Council want to go back on the decision and make the end date contingent on the adoption of new regulation of the rental housing industry, right? So you think about that. They need new regulation to say that, your rent's going to be due. And so what does this look like for landlords that are to their teeth in debt right now? Property taxes are skyrocketing, insurance costs rising, the cost to maintain, operate, and service properties is increasing, and rents are optional. It's going to mean that we're going to start to see a lot of people start to leave the housing market as a whole. And look at this, the Dallas Observer, the pandemic revealed new strategies to help tenants avoid evictions and homelessness. And they're talking about, in this article, which I'll pin in the show notes, they talk about new tenant advocacy networks being formed in Dallas, right, to help protect tenants and keep tenants inside of their properties if they don't pay rent. In Austin officials set new eviction organizing protections for city renters, and they're talking about the same thing about moving into a situation which is going to be equal, and we all know what equal means. It means that it's not going to be equal for landlords. Landlords are going to readjust, and they're going to reassess what it looks like to be a landlord inside of these new guidelines. And we look at Austin, same thing. Eviction rates are skyrocketing, and they talk about these protections. But even this, Detroit considers a moratorium on evictions, but not until thousands could lose their homes. This came out yesterday. So you have Detroit, you have LA, you have Oakland, you have Austin and Dallas all talking about the same problem, right? Everything is coming together. And that's what I've been talking about. Everything is going to be coming together. And at the same time as all this is coming together, mortgage rates are going absolutely crazy. So bad credit, if you have bad credit, it's 8.449% for a 30-year fixed rate, right? Average credit score in America, 698. It's 8.118%. If you have perfect credit, it's about 7%, right? So for the average credit score in America, about at 8%, right? 8% on a $500,000 purchase, $100,000 cash down. I mean, how many people have $100,000 in cash they're just sitting on right now? Not many people, right? $100,000 in cash, at least first-time home buyers anyway. 8% interest rate, $500K purchase price, 100 grand down, $4,148 per month. So imagine you're going to go buy a duplex, right? A lot of people were out there buying 2 to 4 unit properties over the last 12 to 24 months at 2.5%, 3%, 3.5% rates. What is this going to look like? When you're buying a duplex and each rental maybe is pulling in $2 grand, $2,100 a month, right? So in total, if it's rented 100% of the time and you have no problems at all on this property, meaning no repairs, no vacancies, no evictions, you would break even. It would be a complete break even at about $2,100 a month, right? How many people are going to run in and put 100 grand down to make nothing? Not many people, right? But that's what a lot of people were doing before with lower interest rates. Now, what I believe could likely happen is that the Fed is going to continue to increase interest rates. And at that same time, the costs are just going to keep rising and rising and rising for landlords. And we're going to start to see mom and pops start to bleed out. And then that's ultimately what I believe is going to open up an opportunity for new investors to run out there and buy that distressed real estate deal. But this is what's happening right now. I believe that the rules are going to be rewritten. I believe huge changes could be coming for landlords over the next 6 months. Massive, massive changes. And I think that the only landlords that are going to be able to survive what's coming are going to be ones that have big cash reserves and that they're really sitting on a lot of equity on their property, and they can, they can move, they can pivot with the times. But the landlords that have 80, 85%, 90% loan to values on their properties because, they simply they got pulled in on the market, what's going to happen when they hit this rough patch? They can't refinance out of their property. They can't refinance out and pull some money out because no lender is going to lend on an 80 or 85% or 90% LTV. They're going to want more equity in that property. They're going to want to keep some skin in the game, some margin in the deal before they issue any of these loans. So what I think is going to happen, a lot of these landlords that, they're to their teeth in debt, they're going to simply say, hey, it's a loan against the asset. The asset's not producing money. It's actually costing me money. I'm going to walk away from the property. That's what I think is going to happen. I think we're going to see a lot of people walk away from their properties. I think we're going to see a lot of change happening. And all this is happening at the same time that we're starting to see small businesses in America get really punished. We just look at the fundamentals, right? 46% of the U.S. economy works for small businesses, and a third of small businesses missed October's rent. What I believe is likely going to happen, there's going to be more tenants not paying rent. And mind you, 76% of all property in America is owned by mom and pops. So you look at it, small business owner is going to get hit. The employees are likely going to feel the wrath of it, and a lot of their properties are going to be up for grabs. That's what I think is going to happen. So if you are intending to invest, maybe you're renting right now and you're like, what should I do, John? You should have a game plan. You should know where you want to invest, what types of property you want to invest in, how much money you need to actually buy this property, what you could potentially do to grow and expand your current business or reduce your current business if you think it's not going to be, successful long term, or maybe, maybe the foundational structure of that business is not going to have long term, value for you. Maybe the world's changing or your business model's changing. People need to have a real conversation, have a real goal, a real plan, and they need great credit to do it. That's one of the reasons I founded greatcreditfast.com, is because I knew, and I've been talking about this over the last 12, 24 months, what's going to happen is more and more people are going to be dependent on credit. They're going to need credit. More people are going to miss payments. More people are going to be pushed into a corner. And the people that miss payments that have bad credit, what are they going to do? They're going to either borrow money at double-digit interest rates, or they're not going to get the money, right? And so those that have great credit, they're going to be able to access money, and they're going to be able to improve their life. So why not offer a value and a service to many people to help them do just that? That's what I did. I founded this company, greatcreditfast.com. We've helped a ton of people. In fact, I hired a team of what I call credit snipers. They literally work in the office with me every single day, Monday through Friday. They're working nonstop. And basically, I funded the entire operation. I hired everyone. I hired the entire team. We're just sitting here. We're helping so many people. It's been awesome. And so my goal is to just continue doing that. Just expanding this business, helping a lot of people fix their credit, helping those people go from being renters and potentially being in debt to buying their first property and moving ahead in life. Because what I think is ultimately going to happen is I think the middle class is going to be in really, really big trouble over the next couple of years. And it's going to be the smart and savvy investor. It's going to be the one that has great credit. It's going to be the one that's being, very honest with their current situation and building out a plan and a framework that's going to improve their life and really taking daily actions towards this. And they're going to be the ones that are going to be okay. But if, a lot of people are doing what they've been doing, which is kind of ignore it and just make the minimum payments on credit cards, they're going to pay back 3 times what they borrow, and they're not likely going to get approved for any type of mortgage that's going to be somewhat affordable, right? So be clear, be honest with what's happening in the economy. Middle class is getting wrecked. That's what's going to happen. And smart and savvy investors are being aware. They're understanding that these moratoriums, I would not be shocked to start seeing these pop up all over the place again down the road, or at least permanent new restrictions coming in that could really change the game. So big changes coming. But at the end of the day, you need to own property. You need to have income generating assets. You need to have stability. They always said, the American dream was the 3-bedroom, 2-bathroom house, the white picket fence and a couple cars, and that was the American dream. That's slipping away for many people, and I think it's only going to continue. What do you think? Drop it below, hit the like button, subscribe now. Subscribe also to my second channel, LinkedIn, Twitter, Instagram, and TikTok. Feel free to call us at greatcreditfast.com at 561-430-5900. 561-430-5900, and I'll catch you guys in the next video.